Hey, it's Mason from Mason's Forex Trading and Investments. Please take note of the risk disclaimer. Everything provided in this video is strictly for educational purposes. Please subscribe to my YouTube channel, like and share this video with your friends and family. You can also find us on Facebook as Mason's Forex Trading and Investments. Today I want to look at NASDAQ or US 100. So I have the daily chart which is shown here, and I have, if you look at this blue moving average, this is the 200 moving average, and the red one is a 400 moving average. As you can see, more often than not, price is above the blue line. So you can see we have some touches here, and a few touches here and there, but overall price is basically above the blue line, and we're moving upwards. Since we're moving upwards, and more often than not this price chart is moving higher or the prices are increasing, we'll be looking for buy opportunities, or we favor the buy side. Okay, currently we can see we have this red candle represents bearish or downward pressure. Then we can see this other candle here indicating more bearish pressure, and then currently we have another bearish candle. So if you look at the previous price structure located here, we've also had a few large bearish candles. This is known as a retracement move, and then eventually we reach this price level. You can see we reach this price level here, and eventually price moves back up, retraces a bit in this area, and then eventually pushes higher. From what we see, if we place a line approximately here, let us go back to our notes. So this is support and resistance for technical analysis. If you look at your resistance line or area, when price reaches this level, we're looking for a price to move away from this line or area. And then if you look at this support line or area, as price reaches this level, there's an expectation for price to move away. What makes this line significant, which is 13142.3, this line is made significant by the number of touches. So we have one touch here. We have another touch by this candle, green candle here. And then we have candle which also touches it but breaks through it. And then we have these two candles which touch it. We have this candle here which makes a small wick. And we have two touches there, or rather three in that area. And then we almost touch at this point. So with this line being placed here, we could say we're looking for some sort of reaction to take us to higher prices, because this line represents or the line that I've placed on the chart represents a support line or area. So in this area or around this level, price level, we can actually look for a engulfing bar, a pin bar, which make up two examples in the significant area. So that would be one opportunity to enter for long. And then if you place another line here, you'll see we have a few touches here, another touch here, another touch here, here, few touches here and there, another touch here, another touch here. Since we're favoring the upside, if price never give us a potential candlestick formation here, or some indication that it might be going up, price can then further fall lower, come to this area here, and then go higher. So we'll look for the same candle setup. We'll look for potentially an engulfing bar, open bar strategy. So we can look for this bar and maybe a engulfing bar, which is a big bullish bar as shown here. That's this green bar. It's actually a combination of these candles. So it'll be that candle, which is your red candle, your pin bar, and a larger bullish candle as shown here. Or we can directly look for this engulfing bar pattern, which is shown here. So this engulfing bar can engulf the previous bar or is bigger than the previous bar. Also take note, it is at a significant level, which is shown by this line here. So it's a significant line, or ideally a significant area. So those can be the two setups for buying. Let me try and draw a picture for you. So we could have your trading plan will help you with this. So we may get a pin bar and a bar which closes higher. That'll be a green bar looking for bullish pressure here. It can be a green one, or it could be a red one, as long as there's a type of rejection at the bottom here. If this doesn't occur, we wouldn't take the trade. And going back to the other area or line, we could simply have price move here down this point, and maybe we get an engulfing bar, and then there could be an expectation for price to move higher. Or we could also come back down, have our rejection bar and a bigger candle. Let's just say we had this combination here, and then you can see we have an ATR. We can use an ATR, one ATR, and let's just say we place our stop loss somewhere here. So everything will be defined in your trading plan. You'll have sets of rules which will help you deal with this location of, or this 13,142.3. So your plan will dictate to you what you're going to do there. And then you have 12,742.1. Also, you need to have a plan. If this area fails, let's just say your stop loss get hit, and then you come to this area here, then you can actually look for an entry here. And then if you had to take your profits, you can take your profits, maybe since we have this big red bar here, you can take your profits, maybe the first profit here, somewhere there. And then you can have another position open. You can have, let's just say you open up 0.02. When you reach your target, let's say your target is 1:1. So which means if you're risking $1, at this point here, you'll be able to make your $1. When you make your $1, you can close this position or close half of the position. So you close 0.01 and you let the other position run for higher prices. So you can close it at a predetermined level, but with the other position open, you can target prices greater than 14,060.7. Anything above, you can hold that position for as long as you can hold it. So those are the setups or strategies that I can give you for NASDAQ. And before you try it out, the best advice is test it for yourself, because you have support in terms of the software, which I've shown in my videos, in my previous videos, how to do the back testing or how to back test. And then what could happen is price may decide to come back here to this level, maybe retrace a bit, and eventually collapse further, and it may hit your stop loss. Again, you'll have plans, or your plan will be in place, because you could have a situation whereby you can get stopped out at this level here, which is 1. You can get stopped out at this situation at 2. So those are the setups, very detailed setups that you can use for yourself. Now I want to look at currencies. Okay, so this is Euro USD and it's the monthly chart. So I've drawn that line to place it in a channel. It just gives us a pattern of how price moves. So if you look at it here, there's a repetitive pattern, or there is something which is repeating itself. So what happens is, as soon as price reaches this level here, somewhere around there, let me see if I can draw that a bit better. So as soon as price reaches that level, it pushed lower, reached this level, from this level, pushed back up. From there, it pushed back down on this level here, pushed back up from this level here, pushed back down from this level, pushed back up to this channel, and from there it pushed back lower, stayed in this range, something like that, and then it pushed back up, reached here. Okay, in this case it never touched our red line, our channel line. Eventually price pushes lower, reaches this level, and then eventually prices pushes slightly above this channel. So over the long term, since this is a monthly chart, there could be an expectation to say the price would go lower over the long term. Then with the current setup of where price is, there's also an expectation for price to go higher. So if you look at these two setups, do you sell or do you buy? Again, your trading plan will help you. Let's see if we can simplify things and look for better setups. I want to take it to the daily charts. Currently on the daily charts, you can see we had this push up, retraced, pushed up, and we had this range or retracement, whatever you want to call it. Then we pushed up a bit, retraced, and then we pushed higher, retraced a bit, pushed up higher, and we retraced, and now we pushed up higher, we retraced, and we seemed at this point we seem to be going higher. So this is the challenge when it comes to forex trading. As you've seen from the analysis on the monthly chart, if we looked at the patterning or the potential pattern within this, if you look at the pattern that I initially drew, you can we've said that we could expect price to go lower, and then we also, because we broke out of this channel or red line, there could also be an expectation for price to go higher. So what can we do? Let us go to the weekly chart. We can have a better view of things. If you look at left, we can use this as the reference. This point is the reference. So what happened is price came to this significant area here, and you can see You can see we had this rejection bar here, that one, and then from that point price pushed lower. Now if you look at this point, you can see this is another significant area. Price came into this significant area and it gave us this rejection bar followed by an engulfing bar, which is this green bar here, again in the significant area, so approximately there, and then it pushed all the way up. So what we can tell ourselves is, if price wanted to go down from this point here, from there, from somewhere around there, price came and then it retraced. If price wanted to go lower, could have went from this point, retraced a bit lower, collapse lower. So in our case, our plan never worked. Or if you had a plan of taking price to this point here, let's just say you had a target of, let's just say 1.06490. Unfortunately, we now having a retracement in this area. Now back to the monthly chart. Just to make the analysis easy, what we can do is, because this is a significant area, right? So what makes this area significant? If you look at this, candle formation was formed on the 2018, or rather on the 1st of the 2nd, 2018. So it's many years ago. So we had a lot of traders who have made transactions. So they most probably saw this nice red candle here, this nice red candle here, or they saw the market going lower. So they could have placed their stop losses above this area here. Let's say there are a lot of traders who place their stop losses all over in this area, or rather, let's just say in this area here, let's just say a bunch of stop losses there. Approximate price level will be 1.25063. So what we can do is, we can wait for price to reach this level to push up here and then give us some sort of rejection bar followed by a engulfing bar or another red bar or selling bar, however you want to put it. We can wait for that. Now we can wait for an engulfing bar with another small bar on the left hand side. Something similar to the engulfing bar strategy or this pin bar strategy, which can be adopted. That's for bullish price structure. If we're looking for some sort of selling bearish price structure, we could have looked for this engulfing bar rather, and this pin bar with this bar here. So if you go back, this would be an area which we would consider to be going back to our notes. As you can see from the notes, we're looking for a resistance line or area. In our case, we have a few touches here. We have approximately 1, 2, 3 touches here. But because this area was created about 3 years ago, hence it has significance. So that is one option. Another option we can use is, if price can come to this level, price can push up here or higher, and then we have a bar, an engulfing type of bar. Then from that point, we can look for prices going higher. So this will be called a breakout. So this can be adopted. If you look at this strategy 3, price pushes up into this significant area, and then we have some sort of retracement. The retracement can be 2 bars, can be 3 bars. You've got to test different setups, or you've got to test this thing and prove it to yourself. And then eventually, once we have this breakout candle, then we can choose to consider to enter. That's now your option 2. So option 1 was price reaching that point, and then we can sell at that point based on a candle structure. That's option 1. And then option 2, okay. Option 2 was the breakout bar. Breakout bar here would be number 2. So those are the 2 setups we can look at for Euro USD, and that was the monthly chart, just to give us a better perspective. We can also, you can step it down, you can go to the daily chart and look for your candle pattern there, or within this time frame. It would be based on your trading plan. From your trading plan, you'll have ideas, or you'll have a set of rules rather, which you use in your trading plan development or in your trading. Let us look at gold. This is the monthly chart. So if you look at this price level or this area, when you look left, you'll see we have this forms a significant area. Let's draw a line. If you place our line here, you'll see we have multiple touches, and also not forgetting, the significant price levels or these areas were formed approximately in 2011. So this also adds to the significance of this area because of the date that it was formed, and you can see it's many years the price has reached this, that actually price reaches this area, reaches this price level of 2054.90, pulls back or retraces in this significant area, and then it moves higher. So let's see what we can do for gold. Go back to the weekly. We can adjust our support or resistance line. To make it a bit more accurate, you can see we had a wick here. We've had a few touches here, another touch there, a touch there, a touch there, a few touches here. And if you scroll to where we sit currently, you'll notice that at this line, at the significant area, this candle on the weekly was formed on the 29th of the 11th 2020, and price pushed away from this line, and it going back to the chart, sorry, see price reached this level, which is approximately 1786.11, and it pushed away from it, so it formed a support. If we go back to this support line or area diagram, you'll see as we came into this area or this line, we moved away from it, and we look to profit from this technical analysis, support and resistance information. Then you can see we had a big selling candle which came in, and then eventually price would have most probably stopped us out. If we took this trade, we could have made money on 1, 2, 3, 4 candles, but at a later time it came and it, depending on where you had your stop loss, you would have been knocked out. You can see we end up somewhere around here. Right, for gold, what plans can we have? Let's go back to the monthly. So we found one significant line or area, which is this line, which was approximately 1778.27. We go to our weekly chart. Again, we can look for another significant area. So you can see we had some touches here. We had a touch here. We had a touch here. We had some touches in this area. We had some touches here. This line was initially a resistance. And it became small support based on those two candles. Then price, for example, here reached here and moved away. So it was acting as a support. You can see this candle here. Green candle sits on it, and also the red candle sits on it, and then this big candle moves away from this area. So there is significance in this area. You can count there's many touches. Let's see if we can count it. We can count that as one, maybe about 2 or 3 there. 4, 5, 6, 7, 8. We can count this one here. 9, 10 approximately. This one or 11. So when it touches here, it reacts and either moves up or it can move lower. We just need points, reaction points. So it's reacting from this level. You'll see it moves away. And here it also moves away. So you can see we have 10 or 11 touches. So giving us a good significant area. And if you scroll back in the future, you'll see, remember here, we don't exactly come and touch this black line or this level or this price level. We could have also did this. Remember, I normally use these lines to keep my charts clear. Remember, price normally defined as an area because there are many orders within this area. It's not just one order based on this specific line, which is approximately 1782.66. There's multiple orders running in these areas. Hence, we define it as area. And then if you then you can also, you'll see this also an area. So in this area, we're looking for a reaction. Either price moves away from it or breaks past it or through it. Let's go to the daily chart and see if we can before we go to the daily chart. If you look at gold, gold has been in an upward direction for many years. You can see from the left hand side, we pushed up, we retraced, we pushed up, we did a small retracement in the significant area, and we're now looking for higher prices. I favor the upside. I'll be looking for buy opportunities here. So what we can look for, if we can come back into this area somewhere around there and then push back higher, this area was significant. This black line, you can see we've marked it previously. Price held at that level, price held at this level, pushed up. You can see that it keeps reacting from this point. From this point it pushes up, retraces, pushes up. In our case here, it retraced a bit and then it collapses lower, and you can see we have price holding in this area. So we can look for price coming, retracing this area and giving us any of our, as we discussed, any of our candle formations in this area. Sorry, we can look for these type of strategies in that significant area. This is a significant area and we could end up buying and looking for higher prices. Let us look at New Zealand Dollar USD. This is the monthly chart. A bit more trickier in my opinion. The reason is we come back from this point. You see we push down lower. This happened in or around the 1st of July 1999. We push up, we pull back, then we push all the way up, we retrace, we push back up, we retrace, push all the way up, and then we have a much bigger retracement, and we push up. This point we retrace. We tend to be in this type of range or consolidation, and from this point we push back lower and we retrace, and we push back lower and then we retrace. So you can see this is not a strong trend, so you can't back test this and decide if you wish to trade this pair, New Zealand USD. Again, from your backtesting results, you'll have a percentage win for the specific pair. Each specific pair must be tested for its own strategy. So you can go about testing, let's just say 100 or a minimum of 100 trades on New Zealand US dollar, depending on the time frame you prefer. So let's say you're working or you're employed, you can look at trading anything from the 4-hourly, daily, and you can even go up to weekly. You can look for setups in those 3 time frames. If you're not working, you can go from anything from 1 minute up to 1 hour. So what this means is, because if you're not employed, you are able to look at setups regularly on the 15-minute chart, or you are able to look at your chart every hour or during each 30-minute period. So it depends on your plan. You have to plan for your own situation. If you have kids or you also have family commitments, you would want to stay on the higher time frames. Anything again, H4, which is your 4-hour, daily, weekly. You're not working, you're able to view these micro charts, if you can say, or micro time frames. So that's another tip I want to give you. Okay, for New Zealand US dollar, we can take it on, so we can mark our significant areas. So this stands out. It's the two tops of the highest peaks, if you can say. So that would be an easy marking. And then we can also approximately mark somewhere around here. The reason is, once again, as we discussed before, we react from this point. As soon as we reach this area, we push away. As soon as we reach this area here, we push away further. In this case, we break down below it, or we close below it. And in this case, we close above it. That's not a problem. You can see here we almost touch again. We react away from it. In our case, this point, we break. We have a long wick here. You can see this long wick, and then eventually we push away into that direction. So you can see we break lower here. But since this is a monthly, if you are to go down into your smaller time frames, you'll see there will be small or minor reactions within this area. If you take the line again, we can see as price reaches this area, moves away. You can see there was a small reaction away from this line, and we had multiple reactions. As soon as we reached here, price went away. And then viewing it from the top, you'll see price rejects this line and moves away. Another reaction point here, another reaction point here. We have some reaction points here. We have reaction points here. And right here, we also have a reaction point. This is more recent. So the reaction point is defined as support or resistance. Now let us go back to the notes. Those reaction points or those lines that we identify, once again, form your support and resistance. We're looking for these areas or lines so that we can look for candle formations. After we find candle formations, then we can look for potential ways to enter the trade and to potentially profit. So how I would tackle this area. Okay, so recently we had a candle which gave us a rejection bar, very similar to our notes. Then we had an engulfing bar. If we by looking at this chart, seeing this rejection bar and engulfing bar, which looks identical or very similar, would have been a very nice setup. So it would form or be very similar to the pin bar or strategy 2. it would have been, I would have classified this as a high probability setup, and I definitely would have, at this point of time, I would have looked to take this trade if I saw it. My expectation would be I would place a stop loss somewhere around here with an expectation for price to go lower down to somewhere around this level. And if you, as I've mentioned, if you look left, we have this price level to lean onto or to get a clue from. But unfortunately, we don't control the market. You can see it never collapsed. If this was our plan, we would have taken it. And if we trade on the monthly, it depends on what you do. With this candle here, with the rejection bar and the big selling candle here, the red one, as I've mentioned, ideally we would have wanted price to reach this level. But currently, we are having this 2 green bars here, telling us that we could go back here. So let's see if we can, what we can do. So what can happen here is price can push up to this level and rotate, come back lower. So we could look to enter here. Let's just say we have a rejection bar similar to this rejection bar, and then we have this engulfing bar. We could look to go long, to short this or sell the New Zealand dollar. That could be one setup. Our plan will dictate to us. And then we can wait for price to push back up, form this beautiful engulfing bar. After the engulfing bar is formed, then we have an idea, or it could be another entry technique to look for. Higher prices. So if we get the bar, the big engulfing bar here, then we can look for higher prices. You've got two options there. We can, I would say a good target would be somewhere around here if price broke out. We've already marked the significant area. And also take note, it's a monthly chart. So this would be a nice long-term trade. You can see there's no, as price went down, we never had no major retracements. Price relatively collapsed quite easily if you look at that segment or area. So those are the setups from my side. I hope you're able to clearly view and look at things. I hope this analysis has added value in your interpretation of charts. Please comment. If you have any questions, I will be more than welcome to answer them. So until the next video, take care and enjoy your trading.